Can you get approved for a home loan with bad credit? So you want to get a home loan, but you have some bad marks on your credit. Well, it's still possible. There's a process that you're going to have to go through, and there's some tips and some tricks, but I can tell you exactly how to get it done. Let's go. I'm going to tell you the number one way to get approved for a home loan with bad credit. The second thing I'm going to tell you, some unknown tips on what lenders look at so that you can get approved and show them exactly what it is that they want to see and what they don't want to see so that your loan does get approved. And then last but not least, I'm going to share with you the top secret to get your loan approved with bad credit in a matter of weeks, not months. So let's talk home loans. Let's talk mortgages, okay? Home loans, mortgages. This is the financing that you need when you are buying a home. And if you have bad credit, it can make the process a little bit more daunting. And in many cases, people will tell you you can't get approved at all with bad credit. Well, that's not exactly true. It really depends on what we mean by bad credit. So let's kind of talk about that for a second. Many people think that they have bad credit, but that means different things for different people. Sometimes when we're talking about bad credit, we could be talking about you pay people late, or you have a lot of credit card debt and it's really close to the limits. Even though you're making your payments, you may have bad credit just because of your credit utilization and how you may have paid people. Even if you pay them on time, you may be really maxed out and have a low credit score and bad credit for that reason. Some people have bad credit because, well, maybe they didn't pay people. Maybe something happened and you didn't pay that car note, or you got that apartment and you got evicted from it, or you got behind on those credit card payments and now they're not paid. Or in many cases, and this is so popular now, but I'm going to tell you how to get past it, is student loans. Many people went to school, took out student loans, got out, and they were not able to pay those student loans. And so it now reports on their credit as bad credit and their scores are low. So let's talk about which one do you fall in. Are you someone that just has too much debt? Or are you someone that literally does have bad credit where you did not pay people on time as agreed? And so the easiest way that you can find out which one you are is go to myfico.com. I'll give you a link below. You want to look up your credit. What is on your credit report? What does it say? How many trade lines do you have? What is your score? Okay? What is going on with your credit? That is the first step. So when we're talking about bad credit, it's a big difference between not paying your bills or having credit cards that are maxed out. Because if you have some credit cards that are maxed out, that's a little bit easier to fix than if you have like repossessions and foreclosures and things like that on your credit. So first things first, look at your credit, see what's up there before you ever start applying, and know which one of those two categories you fall into. All right, let's get to the next thing. So during the home loan process, your lender, your mortgage company, your broker, they're going to do what's called a qualification of you, okay? They're going to pull your credit, just have them pull your credit. You're going to do an application with them where you tell them pretty much everything about yourself, your name, your social security, your date of birth, where you worked for the last 2 years, what kind of bank accounts do you have, and then you're gonna list out all of your liabilities that are listed on your credit report, okay? That is called a mortgage application, or in the business, we also call it a 1003, 1003. It's a Fannie Mae number for the form. So you may hear a 1003 application in the mortgage process. That is just the initial application that you put in with all of your information. And what lenders are looking for, of course, is can you repay this loan? So this is really important. I want to really break this down for you because you got to understand what the lenders are looking for. And so mortgage loan officers are the people that will help you through this process. And in order to do a mortgage loan, so anyone that you go to, they must be licensed with the state, okay? And it's a really big deal because mortgages had really got out of hand. People were giving people mortgages that they could not afford, called subprime lending. And we'll get into that in a second because a lot of that is back. And I'm gonna tell you, there's some things that you can use to benefit you, okay? Subprime is not a bad word. It is just that some people used it really wrong and they got into a lot of trouble. Mortgage loan officers are now licensed professionals, okay? They have to be licensed, they have to go through background checks, they have to meet education requirements and standards like that. No more just coming off the street and giving people bad advice and mortgage loans that they can't afford. So that's a really, really good thing. So now that we know what a loan officer is, what their purpose is, we know that they work for lenders and their job is to find people like you who want mortgage loans. And so let's talk about that process and how you can use it to your advantage. So there are different types of lenders. There are mortgage companies that only do mortgages. In fact, I used to work for a couple. I worked for a great company called Movement Mortgage. I absolutely love them, still love the owners and the CEOs, and we have a great relationship. But I've also worked for many banks like Chase, Bank of America, and Wells Fargo. And although they do mortgage loans, they do all different types of loans and bank accounts and things like that. So mortgage loans are not usually their number one source of income or the thing that they do. I personally, again, if you have bad credit, I recommend going to a mortgage lender, a lender that only does mortgages, or a mortgage broker. A mortgage broker is a company that is attached and they have relationships, wholesale relationships with lots of different lenders, and they can shop your loan around to see who will approve it at the best terms and rates. Now you pay them a fee and then they find those mortgage companies for you. Again, if you have bad credit, I actually do recommend you finding a mortgage company or a mortgage broker, okay? Not going with a bank like Wells Fargo, Bank of America, blah, blah, blah. Just because in many cases, they are not going to have programs designed for people with bad credit. Just being really honest with you, as of the timing of this video, most of the large banks do not have any interest in that. Their appetite for risk is just not there. So you want to go to who will lend you the money, and you want to understand that companies that only do mortgages, they are going to be more favorable and have lots more programs, okay? They'll usually have lots of different programs, not just one or two or three, hundreds of different programs and different caveats and different guidelines. Or, some mortgage brokers have tons of lenders that have all different types of guidelines. So this is where you want to be if you have bad credit. Additionally, I'll give you one quick tip. With the mortgage broker and the mortgage bank, their loan officers only do mortgages all day, every day. That's the source of their income. In many cases, they have the time and the resources to help you fix your credit, okay? They have lots of different systems that tell you how to rescore your credit. They know exactly what needs to be paid or not be paid, things like that. So again, this is just Noelle's opinion from many years of experience and education, telling you stick with probably a mortgage bank or a mortgage broker if you have bad credit. And that is why, because they want to get your loan fixed and they want to help you with your credit and things like that. And now Noelle is going to give you the granddaddy of how to get approved with bad credit. So again, go to mortgage bankers, pull your credit, things like that. But now I'm going to give you what I did, okay? This is literally what I did when I lost everything in 2009. And I literally had to move back with my parents, me, my husband, my kids, and move in my parents' basement just because I had tried to invest in real estate. I was a total idiot and I didn't know what to do, and I ended up losing everything. One of the things that I learned that helped me get to millionaire status was I learned a concept called subject to, okay? And I learned to find people that were already in foreclosure or pre-foreclosure or bankruptcy or divorce or whatever property problem they were having. And those people were able to sell me those properties and leave that mortgage in place. Okay, so now I got a house, but I didn't have to get approved for a mortgage loan. I didn't have to deal with banks at all. And to this day, Noelle still rarely deals with banks, okay? Once you get away from the traditional way to do things, okay? And I gladly will tell you the traditional way. I worked in that business for many years, but it's way better on this side, on this investor side. And what you can do is help people that are in these situations where they can't keep their properties. And that's an opportunity for you to get properties for pennies on the dollars without spending very much money and without ever having to apply at any bank for a loan. And you still get properties. Again, properties you can either live in yourself or make money on. And that's what I do now. And that's what I teach other people to do. So if you've been watching this video, again, hopefully I gave you all the information of how to do it the traditional way. But know that you can do something called subject to, where the home can be sold to you without the mortgage being paid off and it coming to you. And it doesn't have to leave out of the person's name. It doesn't, this is not an assumable loan. You're not going to go to the bank and ask them to put the loan in your name. No, the loan is going to stay in that person's name. I actually have a whole video on how to do subject to. I'll put a link there so you can understand the whole concept, because it's really an awesome concept, but a lot of people don't know it, okay? But it's an awesome way, again, to start getting properties with bad credit, with foreclosures. You can be in the worst financial situation your own self, but if you have money and have shown that you can now take over this property, boom, that's what we're gonna do. So as real estate investors, again, we do not buy properties the traditional way. And yes, you can get approved for loans with bad credit. Yes, you can get a mortgage with bad credit. And yes, you can get property and become a real estate investor or a homeowner with bad credit. If you need more information and more help, please take a moment and go to noelsfreetraining.com. Again, that's noelsfreetraining.com. I've created a whole course. It's a little over an hour long. I couldn't really put it here on YouTube. It's just for you so that you can get fully trained on this information and have all of the information that you need completely free to you. This is Noel, to your success.